The private equity industry peaked in the second quarter of 2021, when quarterly returns for U.S. firms hit around 13.5%, according to PitchBook. But then came 2022.
Private equity firms add leverage or have the companies that they acquire borrow money to facilitate deals, buying and selling. And so when you make debt more expensive by raising borrowing costs, which is what the Federal Reserve did in 2022, that makes it less attractive to do deals. And when it's less attractive to do deals, that means people aren't buying and selling as many companies, and they are not generating returns, they're not generating profits for their institutional investors. And so what happens is you get a sort of a flywheel. It becomes a chicken and an egg problem where if you're not selling assets or selling companies and returning money to investors, they're in turn going to have less money to give you for future deals. And so everything kind of grinds to a halt.
How is this challenging moment for PE sitting with limited partners and institutional investors? Are they getting frustrated?
Yeah, so it's really interesting. Limited partners, so the pension funds, the endowments, traditional institutional investors in private equity will say sort of privately that they're very frustrated. But they're hesitant to speak out publicly because, in their view, private equity has been a good asset class to invest in for decades, but also a sense at this point that they want to kind of wait and see